If you're self-employed or are looking to become self-employed, taxes are one thing you cannot afford to mess up. Hello and welcome to Practical Personal Finance, where you get the information you need to understand and succeed with money. Whether you're a freelancer, a sole proprietor, or a small business owner, it's important to understand how taxes work. After all, the last thing you want is the IRS all up in your business, which can and will happen if you don't stay on top of this stuff. So in the next few minutes, I'm going to discuss how both income and expenses will affect your tax bill. Then I'll educate you about what types of taxes you might be responsible for paying. In order to understand how taxes work for you if you're self-employed, you need to understand the concepts of gross income and net income. Gross income is the total amount you receive from a customer. Net income is the total amount you receive from a customer minus any expenses you had to cover in order to get the job done. For an example, let's say I baked delicious chocolate chip cookies and sold them to people who were hosting events. Someone has paid me $100 to bake 10 dozen of these cookies for a birthday party. In order to bake the cookies, I need to spend $30 on ingredients like flour, sugar, eggs, and of course, those tasty chocolate chips. After all is said and done, I'm left with $70 in profit for all my trouble. In this example, the $100 I received from my customer represents my gross income. The $30 I spent on ingredients represents my expenses. And the $70 in profit that's left over represents my net income. It is extremely important to understand the distinction between gross income and net income, because the income tax you're responsible for paying is calculated based on the net income. That's right, at the end of the day, the less profit you have, the less income tax you owe. So don't be afraid to pile on those expenses, like the miles you drove to and from the store to purchase the ingredients, and later on to deliver the cookies. The new sheet pans you bought to bake more efficiently, and those cute little boxes you delivered all the cookies in. All of these expenses cut down on your profits, as well as your tax bill. Now that you have a clear understanding of how income and expenses factor into your tax bill, let's talk about 5 different categories of taxes you need to be concerned with. First and foremost is your federal income tax. In all likelihood, this will be the largest slice of the tax pie. For every dollar in net income you earn, a percentage of it goes directly to your good old Uncle Sam. The more you earn, the higher the percentage gets. Let's take the $70 in net income that I earned earlier baking cookies, and we'll pretend that I've already earned enough to put me in a 20% tax bracket. This means that of the $70 in net income, I'll be paying $14 in federal income tax. Second is this thing called self-employment tax. This tax pays for 2 important government programs, Social Security and Medicare. And because those programs are run by the federal government, you pay your self-employment tax along with your federal income tax. The percentage you owe for self-employment tax is a flat rate, 15.3%. To continue our example from earlier, if I had earned $70 in net income, I just need to multiply that amount by 15.3% to find my tax owed. And the result is $10.71. Add that to the $14 in federal income tax, and $24.71 of the $70 I earned is going straight to the federal government. It sure can seem like the federal government is singling you out for being self-employed, but in reality, they're not. If you've ever been a W-2 employee before, you may have noticed taxes for Social Security and Medicare being withheld from your paycheck. In that case, you're only taxed 7.65% for these 2 programs. What you may not realize, though, is that the amount withheld from your paycheck only represents half of the tax being collected. For W-2 employees, the other half is paid by your employer. And now that you're both the employer and the employee, you have the privilege of covering the 7.65% you normally would as the employee, plus the additional 7.65% your employer would normally pay, for a total of, you guessed it, 15.3%. The third tax you may or may not need to worry about is state income tax. State income tax is just like federal income tax, but instead of going to the federal government, it's going to the state government. Each state sets its own income tax rate, so as you might expect, this tax is highly dependent on where you live. Some states like Florida and Texas don't collect state income tax at all. If you live and work in one of those states, congratulations, this tax doesn't apply to you. Other states like New Jersey and California have state income tax rates in excess of 10%. Where I live in Virginia, the state income tax rate is 5.75%. Looking back to our example from earlier one last time, 5.75% of $70 would be $4.03, bringing my state and federal tax bill to a grand total of $28.74. After all is said and done, I'm left with just $41.26 for all that hard work. But wait, there are still 2 more types of taxes you need to know about. Tax number 4 is sales tax. This tax is administered at the state and sometimes the local level, so the amount will vary widely based on your location. I didn't include sales tax in the cookie example for the simple reason that it's typically paid by the customer. You just need to remember to add it to the bill and to later transmit that money to your state and local governments, if applicable, usually on a monthly or quarterly basis. Whether or not you need to collect sales tax will depend on where you're located and what products or services you provide to your customers. My experience has been that if there are no physical products being exchanged, you don't need to worry about collecting and remitting sales tax. Your mileage may vary, so make sure you check with your state on this one. And that brings us to the final type of taxes that should be on your radar: state and local business taxes and licenses. As you might expect, these taxes will again vary from one state or locality to another. If you're selling cookies, for example, you may be required to get a special license from your state in order to operate legally. Your locality probably has some sort of annual business registration fee, even if you're operating out of the home. And you might even need to pay property taxes on any equipment you own for the purpose of conducting your work. Do all of these taxes and licenses apply to everyone who's self-employed? No. But it's worth a phone call or an email to your state or local government to ask. I learned this the hard way when I had to pay hundreds of dollars in fines for non-compliance. Not something I'm proud of, but hopefully I can save you from making the same mistake. Are you self-employed or looking to become self-employed? I'd love to hear about the sort of work you do. Let me know in the comments. If you enjoyed this video and would like to learn more about the differences between a sole proprietorship and an LLC, click right here. And if you're not yet subscribed to Practical Personal Finance, click right here. As always, thanks for watching. I'm Andrew Scheer, and I'll see you next time.